as they would say in other circles, no pressure. So, yes, I'm the director of the Stockholm Institute of Transition Economics at the Stockholm School of Economics, and I did not write this report on my own, but of course with a big team at the Stockholm School. And also, for full disclosure, I'm a board member of the Kiev School of Economics, so of course I'm also concerned about what's going on with people in Ukraine, and I'm not just the academic in the ivory tower. Thank you. Yes. All right. So we of course do this with all of the analytical tools we have, but we also have to transform ourselves into understanding the whole propaganda war issue, of course, and that's really what this is about. I'm not going to tell you all about what's in the report, and I'll try to stick to my 20 minutes or so. The report is available at Konjunkturinstitutet's website. This is the outline of the report. We go through what the Russian economy used to look like before the war as a background to understand what we're looking at. We're talking about what's going on in the economy today, as far as we can tell. We're discussing sanctions a bit. We are then using this to form an opinion about the medium and longer term outlook for the Russian economy, and we make some policy conclusions out of this at the end. We also have a lot of references and appendix on sanctions timeline for those of you in the audience who want to do your own analysis and check if we actually got things right here. All right, the main messages from this report is basically up here. So this is the preview. So if you get bored after 5 minutes, you can, just take a picture of this and bring that home. But I think, as we have heard, the real importance here is that propaganda is not limited to what's going on in the battlefield. It's also about what's going on in the Russian economy. It's about telling Russians and the rest of us here that Russia is really strong, you are really weak, there's no point of resisting us, and all of these things. And I'm going to show you a few pictures that, yes, we should all bring to the future discussions on this topic. And as we all know, inflation and GDP growth are really the two fundamental variables that get cited all the time. Not only here in Sweden, but also when it comes to what's going on in Russia. So we will do a little bit of a deep dive into that. But, we have the finance minister here, we have the central bank governor here. If they had to deal with the policy mix that we now see in Russia, they would look a little bit more stressed than what they are doing here today. I can tell you that. And we know that some of the technocrats in the Russian system, of course, are well-trained economists, and I don't envy them the task of making this system actually work in Russia today. The other thing is, of course, that Russia accumulated a lot of reserves before the war. We froze some of their international reserves in the West, but they still have some reserves. But at the current pace, if we limit some of their other revenues going into the system, they will not have reserves that last for more than 6 to 12 months. That would be my guess. But again, that's contingent on not getting flows of new revenues all the time at the pace that they are. We can also see that household borrowing has increased. The government has tried to balance the fact that they have a policy rate now of 19%, with still creating some demand in the private sector. So they have had a lot of subsidy programs to make people actually borrow in the bank still to keep up demand in the household and private sector. And I think we don't really see that they will have a full-blown economic crisis unless something dramatic happens. We all, as economists, know that we can never actually predict the timing of crisis. What we can talk about then is an increased risk of a crisis. And I think we can for sure say that they are continuously increasing the risk of a crisis. But I don't think like tomorrow is the breaking point of the Russian economy, but I think they're on a very poor path in terms of managing macroeconomic imbalances. This will increase the risk of a crisis in not a too distant future, I would say. And I think we have to remind ourselves also about the fact that, as we know here, we have budget constraints when we discuss policy options. The same is actually true for an autocratic state. We have a lot of examples throughout history when autocrats thought they did not have a budget constraint and that they can walk on water, so to speak, in terms of their economy. All of these examples in the past have ended up with hyperinflation or a dictator that has been run out of their country. So, we should have that also when we think about Russia. This will be part of their reality too. And then, of course, we should not think that we are not part of this game. We are very much part of this game. So I often get the question, when will this end? How long can they go on? And so on. And I always say it depends on what we do. It's not about how Russia manages things primarily. It's actually primarily what type of sanctions we impose and how we make sure that these sanctions are enforced. That's really the key to how long this can be going on. And we should, of course, hit their budget constraint both from the revenue side, and it should be focusing on oil and energy exports. And we should hit their budget constraint on the cost side by making it more expensive to import the stuff that they need in their war machine. I'm not going to go into this, but we have also written on the fact that they're now not publishing all of the data that they used to do, and you can go and check out our report on this thing. But we then have to actually ask ourselves, if they don't want to publish half of their usual data set, why do we think that the data that they publish is actually the truth? To me, it's pretty obvious that something is not exactly according to their numbers. So just a quick flyover of the Russian economy before the full-scale invasion. And this is probably, if I can pick two pictures that I want you to remember after this, this is the first one. Wars is about relative strengths between the two parties fighting a war, right? This is GDP. And we can discuss if we should use market exchange rates or PPP, but let's focus on market exchange rates because that's what you need to use when you're actually buying stuff in international markets and trading with other countries. So if we focus on that, the blue bars are GDP in market prices 2021 before the war broke out. Ballpark number, Russia had 2,000 billion US dollars GDP, Ukraine had 200. So Russia sort of outnumbered Ukraine in this sense 10-1 before the war. But the thing is that if you look to the left in this chart, the Western coalition that's now siding with Ukraine have GDPs that are 25 times the size of the Russian economy. So, we should understand that when we discuss that Russia is stronger than Europe or the West or something, this is complete nonsense, to be honest. And the other thing is, of course, then people say, what about China? Yes, China is a big economy, but we should also have a very serious discussion with China about the fact that we are 25 times the size of the Russian economy. Do you prefer to have very strong ties with Russia, or do you want to develop economic relationship with us? Our economies are fundamentally a much more interesting and valuable market to the Chinese as well. So we have to have that conversation, I think, a little bit more aggressively in different circles. So this is Russia's economic model. Since the breakup of the Soviet Union, since Putin has been in power, This is what happens to international oil prices. It's the black dashed line. And then it's what happens to Russia's GDP if we measure it in dollar terms or in real rubles. We can talk about statistics here, but I can also do more proper statistics and tell you that 60 to 90% of Russia's GDP growth over the full decades that we're looking at here comes from one single exogenous variable, which is changes in oil prices. It's not the level, it's how much oil prices change, okay? So this basically tells you if you want to actually do something about Russia's incomes and growth rates, you need to think about how we limit the price of oil that Russia is going to get paid. So we have to also understand we now have the opportunity to disconnect the price Russia gets paid to the oil market more generally globally. And this is really why we should be doing this. So this is the second most important slide in this presentation. Everything else is basically details. But this really gives us a roadmap to what should we be doing if we want to limit Russia's resources. We can also see that, you know, in terms of the exchange rate, in terms of the stock market, it's all about oil, basically. So that's basically the world's simplest macro model that you will ever get. So we also have this discussion about Putin doesn't have to worry about economic growth. We understand that repressive measures, etc., keeps people not protesting in the streets. But this is what it looks like in terms of popularity ratings and growth in Russia before the war. I'm not using these numbers anymore because I don't really trust, you know, these surveys anymore. But basically, if you take out some pretty extreme events, including the invasion of Crimea in 2014, you're actually left with that picture over there. In the US, you would summarize this with, it's the economy stupid, right? Putin became more and more popular when he produced growth in Russia. I don't think that fundamental relationship has changed, but we also know from this side of the picture that his popularity ratings were really high when they annexed Crimea 2014. So we have to understand that for limited time periods, he can become popular by doing some really bad things in the neighborhood, basically. So that's the quick run over of the past. Russia's GDP growth now, according to official statistics, so I should have put the warning label on some of these charts, but I'm now telling you this. This is what it looks like. So these are quarterly growth rates in the bars, and then you have the GDP in 2021 prices in that line. What is interesting here is that according to official statistics, this is COVID, by the way, the big bar there, when oil prices basically went down to 20 or something like that. They were actually even negative when you looked at some contracts for a very short time period. But the other only negative bar here is actually at the start of Russia's full-scale invasion in Ukraine. And if you look at the green ones, which is quarter to quarter, it was actually only one quarter that there initially where they said they had negative growth. All of the other quarters they claim have positive growth. This is then what has happened to inflation, the policy rate, and then if we compute what is the real interest rate coming out of this. And we can see there again, you have the spike in inflation. And more importantly, you actually had a spike in the policy rate just before they recorded these high inflation numbers. Then inflation came down and the policy rate was lowered, and then they have relatively sort of modest inflation, but you can also see in the blue line that the policy rate has really been going up, and it's now 19%, when they claim inflation is 8 or 9%. Is this consistent with what we would think would be good monetary policy? We don't know. Fiscal balances. These are the fiscal balances. You can also see here that the deficits are actually quite modest if you take the full budget balance. If you then look at what would have happened without the oil and gas revenues, they have pretty massive deficits. So that's in the order of 10 to 8%. Again, pointing in the direction that if we want to limit their resources, we should really think about how much they're getting paid for energy exports and oil in particular. In terms of the National Wealth Fund, which is sort of their piggy bank that they can go to when they're not getting new revenue into the system, this is what the official numbers tell you. These are in ruble terms, the blue thing, so it looks like an enormous increase, but that's of course also linked to oil prices going up and exchange rate movements. As a share of GDP, it's the line instead, and we see it's coming down. Ballpark 6% of GDP is what they say. We don't really know, to be honest. But the thing is that if you looked at the oil and gas deficit, if you non-oil and gas deficit on fiscal, that was 8 to 10%. So they can obviously not finance their budget with reserves if they don't get oil and gas revenues into the system again. And the other thing is, of course, that the reserves that they claim that they have is basically nowadays gold and Chinese yuan. It's not, you know, the world major currencies, so liquidity of these reserves is highly questionable, to say the least. So we should remember this when people say, oh, they can go on forever, and so on and so forth. The other thing is that, as I mentioned, they have been subsidizing household loans. They want people to take up mortgages. They want them to be able to go to the store and buy all of these things still. And this is what happened to households' debt ratios and mortgages, and we can see it's a pretty steep growth rate on that. But again, just to get into a little bit what they're doing in oil exports, the plan from the West is not actually to limit the volume of exports from Russia, but to keep the price they get paid for each barrel as low as possible. So we have to remember that. And we can actually see that volumes have not been going down here, which is exactly what we wanted. And then we can see who is actually buying the Russian oil now. And to no one's surprise, it's China, India, and Turkey, Brazil, Malaysia, etc., etc. I think, again, to me, this is not the problem, actually, and it's not necessarily circumventing sanctions that they are buying oil. They're circumventing sanctions if they don't adhere to the price cap, all sorts of things. But, you know, I think we should remember that it's way more costly for Russia to ship things to China and India than it was shipping stuff here to Europe. So also this tells us that they're making less money out of the same oil volumes, but I think we have a lot of work to do when it comes to keeping the price low. Gas exports, also here we have this fact that Russia's exports have gone down because that was a lot of pipeline gas coming to Europe. You cannot make LNG and LNG terminals and all of that infrastructure overnight. You cannot build new pipelines to China overnight. So there we have seen a fall. And just to remind ourselves, we don't have an energy disaster going on in Europe right now because we have replaced a lot of the Russian gas with other things. It has actually worked out pretty well. What is a bit disappointing on that side of the chart is that there are still quite a few countries in Europe that keep buying quite a lot of gas from Russia still. And I think this is a discussion we need to have. How do we limit sort of our purchase of Russian gas in Europe, basically? Trade is, of course, an important part also of limiting the available resources to the Russian war machine. Here we see what has happened to sanctions good, a specific set of sanctions good, and what countries are now exporting these things to Russia. Again, we see China is really the biggest chunk of this by far. Again, suggesting to me that we have to have really serious discussions with China, what kind of relationships they want to have with us in the future. But the good news is that this is what we are exporting from the EU to Russia. And we can see a pretty massive decline in our own exports to Russia. Another part of this narrative, though, is that people keep saying, oh, well, you're just sending it through Kazakhstan or some other countries and they are shipping it to Russia. Some of this is true. That's the darker blue part of this chart. So there is some trade going through these other routes, but we can see on aggregate that it's still a 50% reduction in our exports to Russia. I think we should do more on this side as well, but it's not this idea that sanctions don't help because everything is going to Kazakhstan. That's simply not true. It's also part of one of these narratives that sanctions don't work and we can just quit that game. So, all right, just a little bit of a critical view on the numbers they put out on inflation and growth. We all know that inflation in itself is an important variable when we think about what's going on in the economy, how our households doing, what about sustainability, etc. But inflation or prices in general also then goes into computing real GDP from nominal GDP, right? So if you fiddle around with these numbers, it's not only going to affect what inflation looks like, it's also going to affect what real GDP growth looks like in the next chart I'm going to show you. But anyway, in this chart, the red and orange lines are the two sort of official inflation measures that they put out for CPI and CPI on food. The green one is from an independent survey company in Russia that looks at fast-moving consumer goods, which they claim is about half of the basket of CPI. And this is what they come up with, the green line here. I mean, it's not like it's a 1 or 2% difference. It's like doubling of inflation rates. Also at the end of this period, in some periods, it goes from the official number being 15% to their estimate being 40%. So, this is not really on the margin. On top of that, we have to remember that Russia has now also introduced price regulations on a lot of goods. You cannot buy whatever you want. The government has sort of an advantage that they can procure before the private sector, all sorts of other things that is sort of messing up, even if we had this as the proper number. So the other thing I want to show you is the blue line, which is basically if you take the policy rate that the central bank is setting, and you use the same real interest rate as they had before the war, and you backward induce what would be the inflation rate consistent with the policy rate that they have been setting, that's the blue line. And you can see that's basically twice the inflation rate of the official statistics. So anyway, I think there's quite good reasons to question their inflation numbers. If we then think about real GDP growth, if we take the models we had before the war and we think about what would they predict happens to real GDP growth, given how oil prices change in 2023, those models would say growth would be negative 1.7 if you look at real ruble rates. It would be -8 in terms of dollar GDP. If we use the Romer that we just saw, to deflate nominal GDP with that inflation number, that produces negative growth of almost 9%. And if you just look at the simple measure of dollar GDP developments, that's -11. Okay. So these are some alternative measures we can think about to discuss how well is the Russian economy doing. I'm not going to spend a lot of time on sanctions here. I just want to point out one little detail, and that's the fact that when we discuss the impact of sanctions, we have to understand what is the proper counterfactual to measure this impact against. So again, based on our models, the blue line here tells you what we would expect in terms of growth based on how much the oil prices has changed. In 2022, they had negative growth of -1. in the model they would have had positive growth of 8% or something. So again, you know, the impact was not small, but pretty substantial. And I know I should stop, but this is what long-term growth looks like, and we can all figure out.
Waiting for that.
Yes.
Finally.
Yes. So you can imagine if you're thinking about long-term growth in Russia today, it's not looking so pretty. Thank you, and sorry for taking too much of your time.
I would like, you have some co-writers here, I guess, too? Co-writers?
I don't have them here in the audience.
Okay.
Yeah.
But to you and to them, an applaud. We are very happy that you... When I gave this task to Konjunkturinstitutet this summer, and they let you write the report, we were happy. And I just have one short, brief question. Is it anything, you knew a lot before writing the report, of course, but is it anything during writing that has surprised you?
No, I mean, it's I guess, for us, the main thing was to try to figure out what can we do, given that we think this is part of the propaganda machine, and then having to think about. So what I didn't show you here is that there are a lot of efforts, people using, you know, high-frequency data, Google Trends, emissions, electricity consumptions. But I think what is a little bit disappointing is that we don't really have systematic evidence on the macro level if we don't look at official statistics. So I think it's time that we spend some more resources on developing our own proxy measures of what's really going on. So that would be maybe a little bit of a negative news to this.
You will be able to ask questions to all our three guests later, so you can start thinking of all your good questions you understand. So I will let Vladimir, yeah.